The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman on this 9th day of July. My pleasure to be here. Tiger Technicians Hour, noon till 1 p.m. 877-927-6648 is the number to call. Let me see now. This is going to be very interesting. The Dow is up 300, and I've been saying to subscribers, we've got to watch the 24,680s. We're at 24,758 on the Dow. So a couple of things are going on. You can see from the E-mini chart, I had drawn for subscribers to my opening call this U-shaped pattern that said there's a chance that we could be making a push to the upside with a target of 27 right there, 2785.25 at some point early in the week. Well, we actually got there this is what is not 2.5 hours. So this is very quick. And what's really important about this is that the MACD finally is crossing positive. Actually, it said 0. Well, it's crossed positive, and the stochastic is lagging a lot, but it is rallying. It's at 51% on balance volume. The blue line in the daily chart is really strong. Now, what's really important is that the arch formation in the weekly chart of the E-mini has made quite a sharp H pattern right there, and a much broader one here. The left side high of 27.96 made on the 13th of June, that's going to be a target to go. If it goes above that by 25 cents, that'll be a leg D. At leg D, other things can happen, especially if it's a leg D underneath the high that was made on the week of the 16th of March at 28.14. Here's the 120-minute chart that I showed subscribers. I also posted in the den this morning. Huge cup formation, more like a bowl formation. What's really important about this is that you've got a left side, right side price time match, and it came in earlier by a couple of bars. 2785.25 is the high that was the target. Went to 2785.50 so far today in a leg D. In a 120-minute chart, the MACD is strong, stochastic is very strong at 95%, and that makes 2774 the 9-period exponential moving average and 2769 the 14-period moving average key support levels to monitor on the downside. Now let's get out of this, and I want to go through things, and this is I'd said last week was important in the sense that it was telling me that there was a rotational aspect to this that had come back in fashion. What that means is that we didn't get what I call the Granville sell-off of 97% of all the stocks coming down at the same time. That creates that waterfall cascade, closes down like 280 points next day, closes down, the Dow's down 170, then it closes down again, triple digits. No, once you've got the rotational aspect, it means that you've got the balance of power. You know how you got the scales of justice, always trying to find a balance. And that says that, yes, you can have something like the SMHs, the semiconductors, which we remain short, the semiconductors down 12 cents at 104.83, having had a spike earlier and then pulled back from 105.84 with a pretty negative daily chart. Weekly chart has just made a series of highs. It's kind of an ascending head and shoulders pattern. I don't take too much, put too much import into that, but I do put a lot of import into where does the weekly chart close? Is it above or below the 9-period moving average? So far, it's been closing below the 9 and the 14-period moving average. MACD is still negative. Stochastic's down at 57%. So that's saying to me, we've got to keep this in mind. And I want to show you something here. I did it a little earlier on. I hope I can get it right now. Yes, there it is. Look, the red one is the S&P. This is a monthly chart. These are just bars. There was that crazy move in 2000 where the semiconductors were just on an incredible tear and had a solar performance going to all-time highs, made their high Look at this right here. March of 2000. This is the stocks index itself of 1,346. And it certainly takes a tumble from 1,300s down to, let's see, 12. Nah, sure. Yep, 12. I mean, really, that's a tumble of a certain magnitude. Now, what's happened is, you see, look, other than the aberrational 2000 period, look how beautifully the SMHs have matched the SPY. The blue one is the SPY. And all of a sudden, the SPY overtakes the SMHs, leads, and is underneath its all-time high of, this is the, is that the, yeah, S&P 500, all-time high of 2801.90, January 26th of this year. Just double checking. Why does it say March? Something's wrong with this picture. That should be January. All right. Well, the high was at 2801. And it's pulled back some. It's running very nicely to have 22 points, up 0.82%, Dow's up 1.20. And you've got a very interesting phenomenon because the SMHs are down. So now look at this. The overlap right here and the negative action of the semiconductors, although they're holding above key important monthly levels. This is not very good. And that's the reason why I've said to subscribers, we're going to try to be as focused as possible on what we have and what we don't have. Let's get out of this, and I go back to the story. And the reality is that because the semis led us on the way up and led us on the way down throughout the last couple of years, I have to put a lot of import into the fact that the SMHs are now failing. That's it. Just keep that in mind. Aha, but wait a minute. Let's go on. You've got the, so I'm going back to the story here. The Dow up, where did it go? Oh, did I just mess it? I didn't. Darn it. I'll get that back. INDU. The Dow is up 311. Real nice move. What is it doing? It's filling that gap. The gap, remember there was that gap down on the 18th of June, 24,825, and the next day, bad news, and it comes down, gaps down, 24,567. So you've got this 24,825 level, and you had a little bit of a bounce to 24,804 on the 20th of June. So now what we're doing is we're coming in to try to tackle that area. Dow's at 24,766. That's the daily. Daily, I would say to you, is making a cup formation on a very short-term basis, even though we're still short from just about about 100 points off the top. I'm still looking at this and saying, be as objective as you can. Stochastics rallying is not great. It's at 34%. MACD is moving very sharply higher. It has just gone positive. It says minus. Yep, just gone positive by 4.97 on the 0% line. And the price is in leg B, gray leg B to the upside. Weekly chart is still really quite ugly, trying to make a W formation, and the stochastics way down 56%, yet the monthly chart is holding pretty darn well above the 9-period moving average. So I want to go through this because the beginning of the week, it is really very important. I'll explain as we go, and I'll tell you the IWM is very close to its all-time high, as are the Qs. We'll talk about that, this bifurcated market. Be right back in a moment.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary power law vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, so we're done with the story of the Dow, only in the sense that I still think this is range bound. Let's just keep it that way. Let's go to the S&P. Show you the parameters right now. SPX, there we go. S&P, very strong gap up move in leg B, gray leg B, because underneath the 2791.47 level, but that's just 10 points away right now, 2781.97. And the MACD is just crossed positive, and the stochastic is good at 50, is improving at 53%. Still not strong, but the on-balance volume is very strong. This is different because the weekly chart needs those 11 points to go to a leg D, and then we have to reassess, because it would be a leg D underneath the previous high. So that's going to be very important. But the weekly chart is leading to the MACD and stochastic are okay. Stochastic is 81%. MACD is just turning positive here, but the monthly chart is still very good. Now we get to the QQQ. So the QQQ up 84 cents, 176.44. And the MACD hasn't yet crossed positive, still minus 0.08 on the 0% line. The stochastic is at 48%. Interestingly enough, very strong moves, but less impressive than even the Dow, although the Dow is not performing as well in price in terms of where it had been and where it is now. It is performing on a short-term basis quite a bit better. Now, what's really important about this is that the S&P so the Dow is the laggard, S&P is next in line, better than the Dow. The QQQ is much, much better than the both of them. And what's really interesting here is that the Qs at 176.44 only got to go 177.99 to start a new all-time high in leg D in the weekly chart, and that would extend leg E in the monthly chart. So cannot dismiss the strength that I'm looking at. The MACD is good. The stochastic, let me just get that softer. The stochastic is, let me see, with the stochastic's at 85% in the weekly, still that's good. That suggests that there is weekly and monthly greater strength in the QQQ, the NDX 100. Aha, now we get to the IWM parameters to watch. 175.30 to 174.80 will be key support this week. And a break above 177.20 says, yep, pretty good. It's going to get pretty close to the all-time high. I'm going to go to the IWM. IWM right now is at 168.98. it's got an all-time high of 170.90. What is that? 170.20. And what's really important about this particular V-shaped pattern is, let me see, yeah, is that if there is a new all-time high above 170.20, that becomes a new leg G/C. That would portend potential leadership quality because of that monthly breakout above resistance. And I gotta respect that and say, you know what? IWM is really the leader here. Now, what's really interesting about this, I showed you the SMHs, which were lagging, and the XLK, which is the S&P. This is the S&P Tech Spider Fund. Peak D, well, leg D in the monthly chart, a G/C in the weekly chart, and that says, yep, you could go to an all-time high above 72.46. That was it twice on the 14th. Whoops, now I've got the phone going. Yep, Sam, okay, I'm busy. Sorry about that. Let me just make that softer if I can. There we go. Okay. And what's really important about this particular pattern, let me draw it in. Didn't have a chance to draw it in earlier, but I'll do it right now. There it goes. Got it there. Got it there. And that says that the XLK, this is going to be very important because the and the text, the MACD hasn't crossed positive stochastics at 49%. I'm watching this closely. One of the reasons why I've said to subscribers today and tomorrow, that's Tuesday, are really important. This is exactly the level that we can start to see either if there's a double top or breakouts in the IWM, the QQQs, and the XLK. If it's going to happen, it could happen by tomorrow. When you have a bifurcated market, when your lead, for me, the lead indicator, the Dow, I know people say it's only 30 stocks. Believe me, it is a mix now that is really a perfect mix. It's got high tech. It's got really stuff it never had before. Important high tech, important financials, important stocks like the defensive stocks. And, you know, I think that this is a Akima Home Depot. This is a very important moment. So I'm looking at this and I'm saying, okay, in the spectrum of where we are, and I did this for subscribers, I was saying this is what we're looking at going out, many months going out for the full year. What do we want to do? Do we want to cover the short position in the Dow? Do we want to add to any of these short positions, or the one that we had, the IWM at the exact high, and we got out, made nice money, got stopped out for the small remaining part on Friday. I'm looking at on Thursday, and I'm looking at this and I'm saying, you know what? I'm trying to be as flexible as possible. I've got to think here a little bit out the box and a little bit in the box. I'll show you, I'll explain what I mean as we move along. Look, you've got gold. Gold should have been really much, much higher. It had a spike earlier today. Now it's only up 5.6 at 1261.5. Couldn't even go above the 14-period exponential moving average, the black line there at 1263. I'm looking at this 1260. Yeah, 63.80. And what I'm looking at is that weekly chart still say, and the monthly chart says, still going to be a little tough for gold at this particular point. But it's I'll do silver because I know a lot of you look at silver. Silver's up 0.08. Same thing. It bumped the 14-period moving average. Now it's back at the 9-period moving average at 16.15, up 0.08. Hey, this is really the issue. The dollar, and I'd said we're still long the dollar. It's at 94.12. My target is the 93 based on the UUP, the whole discipline that I developed over the years of a way of looking at called the Chapman wave, unconventional flat-based restart. Says there's a chance that the dollar could still pull back and could pull back to the UUP, which is the dollar bull ETF, back to about the 2460 level. Based on what I'm looking at is the 2484. But most importantly, look at the euro, EUR, USD. It had a nice EUR, USD, had a nice bounce. In leg B, call it gray leg B. MACD is good. Stochastics is 77%. That weekly chart suggests it's only a bounce. And it's the same thing for gold that I'm looking at this particular moment. So we'll see what happens. The USD JPY, that's the yen. It's the dollar yen currency pair. a nice bounce right now of the 14-period moving average above the 9-period moving average at 110.77. The weekly chart, as I said before, rectangle formation stuck between the parameters of about 111.30 and probably 110.30 at this particular point. Let's watch it in the next couple of days. So as I'm looking at this, I'm looking at it and I'm saying there are some changes in that the shorter term daily charts of the indices have flexed the short-term muscle and have had very nice rallies. Most importantly, what I'm looking at is if you put it together, look, crude oil, I said to subscribers, I think it's very close to consolidation. Maybe it can get to, it's at 73.47. Maybe it can go a little higher for leg C to 75.28, that ish area. But it's stuck between 71s and 75 right now. Let's see what happens, and then I'll talk about the TLT. Try to put the whole package together.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Think or Swim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors. Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live, and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. So, in summary, what I'm looking at here is this rotational aspect. If there wasn't a rotational aspect, I would have said, wow, I am 100% certain that we're going to go down and test the 23,300s in a shorter period rather than a longer period of time. Because this is rotation, is basically raising the base, and I have to look at it as 24,000 to 23,900 is now your key support. If that's the case, then I should know a lot more by tomorrow, tomorrow's action, that is. Then what I would be recommending to subscribers is one formulated plan that we had discussed earlier on. and that I think could be implemented. If I see that there's going to be internal weakness, that this is just an aberration, a short covering, because I don't remember if I believe Dave White had discussed this earlier about a week and a half or so ago, that he had certain oscillator readings that were extremely oversold, and those oscillators now are going to the overbought area in some cases. So I'm going to be watching this, because what it does is it corresponds to some of the moving averages that I'm looking at, and that's really what I have to assess. So now, I just wanted to get to some questions here. This is a very important one. ABMD, which is this is a biomed. It is really a top performer in the IBD 50, Investors Business Daily Top 50. It hit 450.93 and 450.65 for a Chapman Wave 2-bar reversal on the 20th of June. That's with the peak D in the daily chart. It's got a G/C in the weekly chart and a D in the monthly chart. Heart assistance devices, medical area. We had this one way back. I think it was like in the 35s or 40s. I didn't ever expect that this is a stock that's going to $450. So Joyce says, Basil, hi. I can't call in, but we'll listen. Could you talk about ABMD, a biomed, and Celgene, CELG? I'm looking at ABMD to go to 530 and CELG to go back to the high. Any chance? Own ABMD at 163. Wow. So first of all, Joyce, congratulations. That's the way you got to do it. You got to. Some of these stocks are just buy and holds and forget about them. This is the first time that I can put it into the category of, now you have to be a little more careful, because there are signs that a biomed trading at 405.01 right now, down 98 cents, is beginning to weaken on a shorter term basis. Now, normally I would say, hey, you've been in this a long time. This is the area, leg D, monthly chart, MACD is good, but the stochastics at 90%, but it is starting to turn down. And the weekly chart has really seen a deterioration in the technicals, even though the MACD is still good and the stochastics at 80%. I would normally say, take something off. You've had a huge gain. I don't know the situation and how much you've got in it. But I am going to say this. There are two things going on. One is a biomed they are doing something in their field. I believe at the time that I was looking at it in great detail, it was cutting edge. I'm not sure now whether there's a lot of competition. But what I would say is, within the context of what I'm looking at, technically, I would put this into the category of, I would definitely take a little bit off and I'd wait a little longer. I want to see how it tests both the 403 area, which is the 9-period moving average in the weekly, and the 378, which is the 14-period moving average in the weekly chart. Now, what's really important about this is that if you've had it for a very long time, I'm not sure that even taking something off now and then putting it back, if your target is the 530 area, because if that's the case, and I'm not sure how you are working that, because it's never been there. That was the all-time high. If that's the case, I don't think I want to mess around, Joyce, with anything. You've handled this brilliantly. I don't want to be the one to say, hey, take some off and you never get it back because it doesn't come there. I'm just saying, if you're looking at it from my perspective, I would be taking something off, and I'd say, if it holds, and you're talking about 10%, I don't know if I'd bother about 10% if I've had it that long. But if this was a fairly recent purchase in the last year or so, so it's not quite as big a gain as what you've got, then that's what I would do. I'd take something off and I'd put it back. If it can start to hold between 380 and 375 over a period of 2-3 weeks, I'd start putting it back there. Now, what I am looking at for the 530, there is a lot, and you've had it for so long, I don't know if I can even talk about this, because we're talking maybe even a year. So it could be 6 months, consolidates for maybe another 2-3 months, then it starts on its way up. I think that if it breaks 450 on a close, no, if it breaks 467 on a closing basis, you're absolutely right. The 500s would be the target. I'm just a little concerned here that the weekly and the daily are suggesting to me could be time. It could be during the digestive phase right now. So I'm not going to mess with you. You're the boss of this stock. You are really. All I'm saying is that if I got in later than you did, I'd be taking a little bit off and putting it back. It has a different percentage perspective. In your case, I don't think 10% is going to make a difference when you're looking for another probably 12% or 14% on the upside. So that's what I'm going to say. And congratulations. What you do want to look for is the pattern that you need very much is the U-shaped pattern. So even if it came back to the 380s, 370s, you want to buy October, it's got to be on its way back. It has to be back into the 430s, 440s on its way to test that previous high. That's the way I would look at it. That's the pattern. Next thing you asked about Celgene. Celgene is one of the key stocks in the IBB. IBB's had a spectacular move to the upside. We went long Tuesday a week ago for subscribers. We have a long position. And the IBB is doing very nicely. And Celgene is doing well. It's at 83.89, up 1.45. And you said you are targeting now, what did you say? Yes. So Celgene, this is what I'm going to say. The Celgene chart in the monthly made a peak E-top, Celgene Corporation Biotech, trading at 83.88, up $1.44. It made a high back in at 147.17 back in October of 2017. It really took a dive. It went all the way down to the 76 area. So now it's at 83.88. I've got this as a leg D, and the reason is, and I wanted to show this chart, and it's really important that I take the time now. You see this chart, you see this leg up, and then a long rectangle. It takes it out once, and then it breaks to the upside. This is the Chapman Wave propeller shaft in a rectangle fashion. And the reason why I wanted to bring this up is that if you look at the, should I do that now? Yeah, I'll do that right now. If you look at the weekly chart, look at this, of the Dow. Look at this. You could make an argument that this is a rectangle fashion right here, right? And if ever at any point we take out 23,300 on a closing basis, we could add the same 1-to-1 to the downside. You've just got that experience to the upside in Celgene, and that's on the daily chart. So I'm calling this a leg D. I suppose I could call it a recycle leg B. I'm calling it a D. MACD is good. Stochastics at 84%. I like it very much. We got a break. I'll do a quick little. I'll do this when we get back. Finish it up.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
So let me just go to the Celgene. Although it's up $1.46 at 83.90, if you look at the weekly chart, it is just now starting to turn. It is still in the sell mode category. So Celgene is completely different. Now, could it go back to the high in the 140s? I believe that if the biotechs are able all month long in July to hold key support, they will become one of the sectors going in favor, regardless of what happens in the other sectors. And Celgene, which used to be a great winner, I don't know, they've been in a terrible streak over the last year and a half. If it's able to get to the if it's able to cross above the candle of the 18th of May, the high of 86.30, and preferably it does that this week, I would say to you, yes, going into Celgene right now, which it seems like you've done, I would say that that's good. Most importantly, over the next 2 weeks, I would not like to see it break 78. It's had a very quick move to the upside from the 78s to 83.90. If it gives it back in that Eiffel Tower straight up, straight down technique that I talk about, be real careful. But yep, if you're in right now, it's doing very nicely. And yes, the IBB trading right now, it's up 32 cents at 116.50. I'm going to call this leg E. Boy, I feel this to be a leg A and have B, C, and D still to come. I don't know, that's a tall order. I'm calling it E for now. Let it prove itself. I don't mind. We've got a real nice gain. I can raise the stop in this environment. Making profits is really an accomplishment, and so we'll just raise the stop. We're in at 110.79, trading at 116.50, and that's in less than a week. You got to expect some kind of a pullback. So watch it closely. Sean wants to know if you have time. Been long the okay, so let me see. He really wants to know about the IWM. So the IWM right now is trading up 70 cents at 168.96. The MACD hasn't turned positive. It could still turn positive. If it does that, that's got at least another 1.5 on the upside, I'm sure. Stochastics at 56%. So it's really the weekly and the monthly charts that are dragging the daily up. That's very unusual. Usually it's the daily that wants to trigger improve technicals in the weekly, and the weekly improves the monthly. So this is that sudden V-shaped pullback that we've had from the 170.20 top. I'm looking at this and I'm saying, you know, Sean, we've had a real nice profit from this. We did take money out of it. I have a plan, and that plan can only be implemented under certain conditions, which I've stated in my opening call. I'm going to stick to that plan. Now, if you are still long and you still obviously have a profit, I'm going to say to you, don't risk the profit, because if the IWM is going to break down, it means that by Wednesday, it's going to have to do that real soon. And by Wednesday, it should be trading at 167.55 or 167.35, somewhere around there. It needs to just reverse on real bad news and fail. That's what you're really looking at. So if you want to take some profits, you can always get back in. I know it's in your longer term portfolio, but to succeed in that portfolio, the discipline is to keep taking profits and don't let those profits just dwindle away. So that's really what I'm going to say to you. And, you know, if you get back in and you have to wait 2 days or 3 days, you've got your opportunity right now. You'll have 2-3 days, because if it starts to fail, that'll be within 3 days and you can always get back in. In other words, we're talking about the short side. That was it. Next question I had is IYT. Yep, the IYT. This is going to be very important. The IYT has been failing just like the semiconductors. IYT is having a great day today. The transports up 1.84% at 191.95. Got a long way to go to be able to get to the 202s, which is saying, yep, breaking out of the weekly chart. Still haven't made the all-time high of 201, round number high. I'm watching it. We're not doing anything at this particular point in the IYT. I am using it, though, as another one of my benchmarks. And at this particular point, good action today, but still very weak action overall. Next question I had was Boeing. Yep, usual question about Boeing. Boeing, great session today, up 1.86%, up 6.21 at 340. I still see nothing right now. Can have even a little bit more of a bounce, and then I think it comes back and does a test of the 330s. Hey, I could be wrong about it. I was wrong that it went to an all-time high. Wasn't wrong in the fact that it's making the U-shaped pattern that goes to a double U-shaped pattern. That's what I'm thinking. There are, oh, good question. Caterpillar. Caterpillar, if I look to last, it had a very nice day today. Yep, it's up 3.84% at 140.82. Weekly chart, monthly chart are really poor. Daily chart is saying great leg B to the upside. Now, this is the thing about this rotational market, and I cannot exclude it. If, in fact, Caterpillar becomes a leader again, and we'll have to do this in the weekly chart, extend that ellipse to this side. This is the boat, the U-shaped pattern. We've got the left side of the U. Now we've got to get the right side. I want to see Caterpillar become a leader. It has to close above 142.78. Let's go above the 142s in the daily chart. And then I'm going to say, you know what? Nice action. MACD's turning up. Stochastics real horrible at 17%, but it is rallying. Maybe you've now got a move into the kind of commodity type influence stocks like a Caterpillar, which, of course, when it comes to commodity, Caterpillar has been really important. And that's going to tell me a lot. DBC, which is the DB Commodity Index Tracking Fund, it's not going anywhere. It's just really struggling. So it made that peak D in the weekly and a leg D. Yep, a peak D as well in the monthly. Yeah, I'm going to be watching these, not doing anything right now. So Caterpillar and Boeing we did. Now, the next thing I want to do, where was that question? IWM, will there be a breakdown below 165? So that's what I've been talking about. You know, this is really difficult. I don't want to sound like I'm a seer. All I can do is the analysis. The weekly chart, as I said before, if it breaks under the 9-period moving average of 14-period moving average of 163s, that's very negative. And so far, it's at 169. It touched it. And it sprang to the upside. It did 162.26. Now it's rallying. The way I'm looking at this, I'm thinking we're looking at rollover here. I'm not really looking at breakout, but that could be wrong thinking. So I don't want to be, I'm not going to box myself right now. This is the period where we've had, for subscribers, had a lot of success. This is where if I'm jumping in, jumping out, we're going to lose a lot of the gains that we've made. I don't want to give those profits up. I'm just stepping aside for the moment. We have plans. We have numbers we're looking at. We have numbers for entries on things. All I'm going to say is that normally this kind of V-shaped pattern, especially in the daily chart of the IWM, says, yep, there's a good chance you could actually touch and maybe just sneak above the previous high. And then if you start a pullback, that pullback could be very sharp. That's all I can say right now. I'm wrong if the IWM starts to trade at 171.45 this week or next week. I'm wrong because, especially if on a closing basis, the weekly closes there, that means breaking out both the daily, weekly, monthly, in every way. So yeah, it's a very important phase. So we got one more segment to come up. I want to leave that segment for some special things. I had a couple of good questions in the den I haven't had a chance to answer. I'll be right back. Basil Chapman, Tiger Admissions Hour. Dows of 303, S&Ps of 21. I'll be right back. And when the VIX is down at 12.76, back in the 12s. Cannot ignore the 12s. I'll be right back.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of The Trader's Edge, heard here at TFNN.com.
All right, so a couple of quick questions that I had here. I don't know if they're quick. I'll make them quick. The uppercase A in Overstock.com online products went to 89.80 straight up for months and months, and then came down, then sort of found a base in the 28, 29 area, 27s actually. I'm looking at this and I'm saying, you know what? Right here at 36.93, it's not acting all that well today. So I'm looking at it and I'm saying, the question is, will it go back to the 27s? And my answer is that the weekly chart is suggesting that it's just stuck in a range. It's treating the 14-period moving average right there at 38.37 as a magnet. And I suspect if it does come back down, it's going to keep being attracted to the 37 range, low 37 range. So just for the moment, I'm just going to say stuck in a range, and it needs to break above 41 to really say, hey, I'm going back to the highs. I don't know if I can do that yet. Next question was Orly, Orly. This is O'Reilly Automotive. This is a parts company. Yep, it made a high of 290.35 on the 22nd of June, pulls back to the 271 area, has a big rally today, and it goes to 290.34, 2 pennies away from making a new recovery high. So I'm not sure what the question was. I'm just going to tell you this is very good action. But once, look how many charts are making this V-shaped recovery, as if it wasn't quite ready for the decline. It needed to go back and test the previous high. And as soon as it tests the previous high, my contention is to break out, you need to close decisively above, think lowercase h pattern. This is the inverted Y. You need to close sharply above the previous high, not the close, the previous high on the left, to say, no, I've broken away from that resistance. So think of it that way. But in the meantime, back at the ranch, we're looking at a market that is having a rebound. I'm treating it as a rebound for now in some sectors, but in others, let's just do this one more time. I'll do it on the Dow because I love to watch the Dow. The Dow is at 24,761. It is above the 24,680s. That's important. It says, you know what? It could test the 24,810 level. Watch this real closely. Any failure going back below 24,650s, it will be negative on the week. Let's see what happens. I'll be back tomorrow.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics, including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.